What's up, weirdos? What's going on, guys? Just jamming. Just jamming. Let's go. How you guys doing? Let's get this money. Let's get this money. All right. So, pow. Let's get some gains going, man. The whiners and complainers are out in full force, and they think I give a crap that they're upset that the market has been down. Tell it to the whining police, because I don't give a crap, right? Market looks good, guys. Like I said, 4 weeks up. Someone said to me in the comment section, oh man, what are you talking about? 8 months of downward pressure followed by 4 weeks of upside. Let's explore that, shall we? Let's explore that. 8 months of down followed by 4 weeks of up. I'm just jamming. Let's explore that. So 8 months ago was what? How long ago was 8 months ago? You know what would be easier? Let's go to the monthly. That would make it easier. Boom. All right, so 8 months of downward pressure. 8 months of red is what I was told in the comment section. So 1, 2, 3, 4, 5, 6, 7, 8. 8 months of red. So we've got, out of 8 months of red candles, 8 months of monthly candles, we've got 3 red candles and 5 green candles. We bottomed out. Once we bottomed out back in March, once we got into April, so since April, we have shot up an obese 40.98% on Bitcoin. 40.98. We went from 82,000 to 116,000. Yeah, 8 months of down, 8 months of red. Check yourself before you wreck yourself. That is what emotion in this space gets you. Now that person looks like a complete and utter imbecile, right? 8 months of red. Yeah, looks like it. 8 months of red. Radio. Let's get into the super chats. Gamma. There she is. Happy Friday, Rob fam. I'm outside touching grass. There we go. It's open mic night. Absolutely, guys. Open mic Friday night over in the 10% club. Make sure you get over there, guys. Link is in the chat. It's in the description. It's in the pinned comments. Strawberry Dragon drops in. Happy Friday, Rob and weirdos. Not shaking out. Just patiently waiting. There you go. Ramona dropping that cheddar. She says, everybody please hit the like and subscribe. Please. Happy weekend. Soon to be wealthy weirdos. Yes, exactly. Like I said before, guys, it is open mic Friday night on the Patreon, where we turn the microphone and the camera over to you. And you get to talk. You get to chat. You get to give your opinion. Absolutely super fantastic. Let's get into the chat, guys. Let's see how everybody's feeling out there this wonderful, wonderful day. I'm feeling good. I'm feeling great. I'm positive. I'm going to be doing some buying this afternoon again. That's what we do. Danny, what's up, buddy? Watching over on X. My dude, Paul, good to see you, buddy. Isaac, I see you, man. I see you, brother. Jake the Snake, how's the Dow looking, Roberto? Let's look at the Dow. Let's look at the Dow. The Dow is down. She's down. She's dropping like a stone. Hang on a second here. She gone to the downside. What do we got? Donald Pump commenting for the algo. I appreciate you, my friend. I appreciate you. Every little bit helps the cause. Absolutely. David, hello, panic sellers. Click the likes. Loaded up this morning on Cookie, Toshi, Zebek. All is good. Enjoy the ride. There you go. Quentin, what's up, buddy? Fridge, what's up, 10%ers? Beebs, my guy. What's up, man? What's up, Crypto Blueprint? Yes, guys, just so you guys know, also over on Crypto Blueprint today, I will be dropping a video. It is featuring Ted Lutz. He is a member he's an advisor at ZBEC, longtime advisor for ZBEC. So I will be dropping that exclusive content over on Crypto Blueprint today. So make sure you guys are over and subscribed over there, or else you're going to miss it, right? It's going to give a lot of good insights to ZBEC and stuff like that. You don't want to miss it, guys. Mad Adam in the house. What's up, man? Crystal ball works no matter what Rob is wearing. There you go. H. Barbarina in the house. Crypto. I will never get over the fact that I sold one gem for another. Sold ZBEC long ago so I could stake XCN, higher APR. And then ZBEC went nuts. Never fade a gem. Yes, exactly. Always be patient with your gems, my friend. Never what do I often say over on the Patreon, guys, when people ask me if they should sell one of their gems that's been boring for something that's been pumping? I say, do not ever rob Peter to pay Paul. Doesn't make sense, guys, right? Why have one when you can have both? Exactly. Jake the Snake, may your wallet be fat and your profits obese. Absolutely. Good afternoon, Rob. Spencer said he felt so I did too. There you go. There you go. Yep, his whole bloodline is on the line here. Exactly. Danny, what's going on, buddy? Jesse and James, what's up? Why do you always talk so much? Yes, I talk way too much. I should just, stare into the camera so you guys can get lost in my lusty eyes. David with a Y in the gym, waiting for what the Rob fathers gotta say. Absolutely. We're going to get into some good alpha today, guys. Good times ahead. Good times ahead. Let's bring the Bitcoin chart back up over on the screen. So Bitcoin, go back to the daily time frame here. Bitcoin, ooh, a little funky there. So we did have our dip. Wasn't close enough to the CME gap, though. That's the question. Well, we did hit $114,700, about $28. Is that close enough? Was close enough? Maybe. Sometimes it is. Sometimes it is. All I know is that we have been climbing our way back up, 116,300 right now, back up and working our way towards. If we can get back above support here at about $117,234, that would not surprise me at all by the end of the day. Look what happens. Every time we've dropped past that level, we've wicked right back to the upside again. So can we get, let's put in a little bit of a, can we get back above that line for the daily close? We'll find out. All right, what else do we have? Easy. Rob, over the 96 to 18K BTC becoming, that's 114K for the trolls. Let's get it. Absolutely. David, hey Rob, little TA on XCN just to make me feel better. I don't know what the point is right now on looking at altcoin charts, but I suppose that I can. There's not really a point, guys. It's a red day today. Nothing's going to break out today. Ethereum still inside of its bull pennant though, so even though Bitcoin is down, Ethereum is still primed to break out. I would not be fooled by what's going on right now, guys, because like I just said, while Bitcoin is kind of dropping, well, guess what? Ethereum is not, right? Ethereum, this could be the transition phase from Bitcoin to the altcoins, starting with Bitcoin coming down a bit and consolidating, and Ethereum taking over, leading the altcoin charge. Very, very possible, guys. Very, very possible. Yeah, for ZBEC, I mean, you've kind of caught support. Right here, right? I would like to see us come back up above 1 cent 575. That's what I would like to see happen. But for now, let's see if we can hold right here. I wouldn't be surprised to see altcoins recover going into next week, right? We're probably going to have a bit of a boring weekend, guys, really. I mean, I think Bitcoin tonight, we could drop down to fill the rest of that CME gap, or we could just go sideways. But either way, I think that Ethereum and the altcoins are going to start to move. We're starting to see it already, right? If we go, let's actually go look at the Bitcoin dominance as well. I haven't looked at that today. It's on a downward curve again today. As you can see, we've rejected off resistance now on the Bitcoin dominance, and we are moving to the downside. So let's go check out what's the total 2 doing. Yeah, it's on a downward curve as well, but it's not really plummeting. Kind of sideways, guys. Kind of sideways, like I said. Jake the Snake, can't wait for the next ZBEC dip when BTC pumps so I can buy more. Yeah, exactly. Diana, hey crypto fam, good luck everybody. Absolutely. Ceiling fan, what's going on? When do you think we get a 3 to 4x on our alts before the end of August? Yeah, I do think before the end of August. Loss, hey Rob, I finally convinced my brother to get into crypto and he bought Swift. He's going to be a happy man by the end of this year. Yes, I agree with that analysis, my friend. Spuds, what's up, buddy? I see you, man. Banders, 8 months of colorblind. Yeah, exactly. Jamie, hey, what's going on, man? Good to see you. Good to see you. Truth Seek says the people thinking it's down the last 8 months most likely weren't slugging it out in the crypto 8 months ago, and now that they are all the instant. Yes, you're exactly right. You're exactly right. Instant gratification. They weren't even here for 8 months, and they're saying that, right? Tanya, drinking margaritas on a red day is dangerous. I spent too much DCA. There you go. There you go. You'll be happy later, though. You'll be happy later. Yo Mars, what's going on? Is there hope for ICP? Yes, there is hope for ICP. ICP is a pretty good project. It'll be fine. It'll be fine. What are your thoughts on Jesus Skywalker saying that there will be no altcoin season anymore? Well, I would think that anyone who names themselves after the Messiah, Jesus Christ, for a YouTube channel, I wouldn't take them very seriously. With that being said, again, those kind of people, Jason, the people who say that kind of stuff, there's not going to be an altcoin season, we've topped. You have to understand something. They do that because people click on it. If I made a video right now, as soon as this live stream is over, saying that there was no altcoin season and stuff like that, I would get an unbelievable amount of clicks on the video. That's why they do it, right? Those kind of people I wouldn't watch because they're only saying what gets them clicks. They're not saying what they actually think about what's going to happen or what's going on. They're not telling you the truth, right? They're feeding into what. All you got to do, guys, go online and you just look up what's the sentiment in the market. What's the popular topic in crypto, and it'll pop up no altcoin season. Boom! I'm going to make a video on no altcoin season, and everybody's going to watch it. That's why they do that, right? So the fact of the matter is, they're not telling you what they actually think is going to happen. They're fear mongering for clickbait because they get paid by YouTube, right? As do I. But I'm not willing to BS you about no altcoin season or anything like that for clicks. I'm going to talk about whatever I want to talk about, whether somebody clicks on my video or not. I'm going to talk about the truth, right? Will my channel grow a little bit slower as a result? Yeah, but I'm okay with that. I'd rather be honest and credible than full of crap, right? Jake the Snake, your eyes are dreamy. There you go. See? Exactly. William, why do people constantly need reassurance? Investing is putting money in and then living your life and letting it mature. You're absolutely right, William. You're absolutely right. Invest in projects that you have conviction in and allow time for your investments to mature. That is how this is done, guys. Eth says, hold my sats. KD, what's up, Sissy Bears? Gambler mentality. O'Leary, there you go. Like, subscribe, and join the 10% club today. Yes, guys. If you're not in the 10% club, I don't know what you're doing with your life. Based on the name, I'd say he's a little silly. Yeah. Miria or Jasmine. Today, I mean, I love Jasmy. I love Jasmy, but there's probably better ROI at this point in the cycle in Myria than there is in Jasmy. Even though Jasmy will give you good ROI, it's not going to give you better ROI than Myria. TNT, Cuba just got accepted to BRICS Development Bank, also Ripple Bank. Next week approved, word on the street. There you go. Let's get it. Gold backed, gold tier 1 XRP. Absolutely. You and Crypto Lifer are legit. Thank you so much, TNT. I appreciate you. Hello. What's going on? Happy Friday. Jared, what's going on, buddy? Good to see you. Oh, look at that. We're all caught up in the chat already. Holy cannoli. All right, so let's get into the news then, shall we? Let's get into the news. See what's going on out there in the crypto world. Guys, really quick shout out to the channel sponsor, as always, Decent Biometric Wallet. Guys, if you love ZBIC, you are going to need a decent wallet through the bear market, no matter how you slice it. You do not want to keep your crypto on a centralized exchange for 3 years through the next cycle. You can get 20 bucks off your Decent wallet right now. They're easy to use. And if you use the coupon code FUTURE20OFF down in the description, you will also get a free ZBIC airdrop on August 20th. This offer expires on August 5th. You have a limited time. No other channels have this exclusive offer. This is between me and Decent Wallets. So get your free ZBIC airdrop today, guys, using my link down in the description. You'll love to see that. You'll love to see that. All right, let's get into some of the news. What is going on out there? Oh, House, what's up, buddy? Held that 1100 dry powder, just added more XCN and Jasmy, hopefully to one. There you go, man. There you go. Beebs, Jerry Banfield must be a millionaire because he just makes videos saying everything's going to zero except ICP. Yeah, no kidding, man. No kidding, brother. Okay, what do we have? Trump targets August 2025 for trade deal completion. President Donald Trump has targeted August 1st, 2025 for completing trade deals with over 20 countries as part of the new tariff policies. These changes are outlined in an executive order and communicated through various official channels. Trump's announcement suggests a significant impact on international trade and associated market dynamics. The changes are expected to influence investor behavior and risk sentiment. President Trump signed a new executive order outlining updated tariff rates intending to address the U.S. trade deficit. New reciprocal tariff rates will be in effect from August 1st, 2025, impacting trade with key partners like Japan and Korea. Senior advisors have supported these actions, focusing on recalibrating economic relationships. The process involves letters sent to various countries describing the new tariff adjustments. The U.S. government has not allocated new funding directly connected to this initiative. Over the top, I see you, buddy. Overcome, I see you too, man. Mataris, what's up, man? Do I think? Yes, I do. I think it's possible, man. I think it's possible. The broader market, including major cryptocurrencies, could experience volatility influenced by these changes. Although direct impacts on cryptocurrencies aren't specified, historical data suggests potential market behavioral shifts. The U.S. and global equities may see increased turbulence. In the past events, cryptocurrencies like Bitcoin and Ethereum showed movement in response to macroeconomic shifts with similar scenarios. Broader financial markets might reflect such patterns. However, no primary sources explicitly link these actions to digital assets. Ari, I see you. Industry experts and government bodies like the SEC and CFTC have yet to make public comments. The crypto community generally remains observant, awaiting potential ripple effects, no pun intended, from these policy changes. Keeping an eye on White House updates is advisable for future developments. So we'll see what happens with these tariffs. Should we be worried? Braveheart says, happy fries that will cross your eyes Friday. Absolutely. Tomorrow, the shakes that make you quake on Saturday. Let's get it going, guys. What else do we have on the cooker today? Let me cook, baby. Let me cook. All right, zero rates are not walking through that door anytime soon, says JP Morgan's Bill Egan.
It's Bill Egan. He's JP Morgan's Asset Manager, Chief Investment Officer of Absolute Return Fixed Income. Good morning.
Morning, Andrew.
To you as we try to figure, okay, before we even just get into the markets, do you want to weigh in on the Powell of it all?
Yeah, man, there's a guy that's getting kicked around a little bit right now. It's interesting to watch. The position he's in is almost a no-win right now, right? Because I think the Fed honestly is trying to do the right thing. They're looking at ongoing inflation pressures. They're looking at an economy that's growing between 2 and 3%. They're looking at equities at the highs, volatility at the lows, credit spreads at record tights, and saying to themselves, are rates really that restrictive, in this environment? And yet they have the administration pounding on them to cut rates. And I ask you, when do you typically engage in a rate cutting cycle? What's usually going on? Usually the economy's cratering, risk assets are getting, are getting banged up.
And rate is starting to really push higher. That's what normally would be happening.
Right, exactly. And it's like, this is, rate cutting cycles, this is not what's born of rate cutting cycles, what's going on right now. I mean, there's so much speculative behavior going on, and, crypto and again, meme stocks and credit spreads being extremely tight, which creates a conundrum for fixed income investors, right? Because when credit spreads are extremely tight, everything becomes interest rate sensitive, right? And I see a lot of people taking risk in their fixed income portfolios through things like high yield and other areas like that, when they'd probably be better off, because the environment, in my mind, is actually pretty good for risk, right? Everything this administration is doing is trying to turbocharge the economy and, get equities higher and everything else. And that's not necessarily commensurate with lower bond yields, right? Which is,
when you're spending more money too.
Right, 100%. Well, and the Fed continues to print. They still have a $7 trillion balance sheet. You've got $37 trillion in debt, $2 trillion deficit. I mean, the fiscal side is really tough.
So one of the things that's so interesting about you is you're not just a chief investment officer. You're also somebody who owns your own businesses.
Yes.
We've seen this kind of play out. We've talked about this in the past.
Yeah, and for all those who say that tariffs are disinflationary or deflationary, I have an issue with that, because I'm seeing firsthand the cost, particularly in things like construction costs. Particularly if you're putting up a building, you need fabricated steel from anywhere but the U.S. And there are specialty companies outside the U.S. that specialize in that. You're seeing instant, margin erosion on your projects. At least I certainly am. And wages are also tough. I mean, they seem to be, wages are sticky and moving up now. Particularly for construction type jobs, whether it's pipe fitting, electricians, roofing, windows, you name it. So I just don't see these inflation pressures dying away. I know everyone wants to go back to the days of zero rates, but I got to tell you, zero rates are not walking through that door anytime soon. And that's something that fixing investors have to get comfortable with and stop living in the past and thinking, oh, I'll just wait, rates are going to go to zero again. They're not. And that creates a problem. And, the fact that equities and bonds have been rallying together, particularly recently, that's not healthy. Like, that's not a really good thing.
But what do you ascribe that to?
Just the changing dynamics in the market. But at the end of the day, Andrew, and you know this too, I mean, the Fed's already eased, 75 basis points, right, off peak. And yet the 30-year Treasury is higher in yield than it was when they were at 5 1/8, right? So the long end is telling you there's something seriously wrong and something bad going on. And I think it obviously relates back to the fiscal situation of the United States, which is getting worse, not better. And I think the long end is going to continue to focus on that. And as long as it does, it's just going to be tough sledding for.
Okay, what about the shadow Fed, the idea that there already is a shadow Fed chairman without a name?
Yeah.
Meaning come May, this person's already there. We don't know who they are, but they're going to lower rates then.
Yeah.
And so that's the story.
And that's fine. I think they will lower rates. Will that lower mortgage rates, which are based off 10 and 30-year treasuries? Probably not. So the whole intent here is to stimulate housing, stimulate real estate, stimulate the economy. You can cut the short end all you want. It's not necessarily going to translate, as we just talked about. The 30-year treasury is higher now than it was when Fed funds were 75 basis points higher. So they can cut all they want. At the same time, they've got to be careful of, they're trying to turbocharge the economy. That's not deflationary, right? That's, so all these things, like I'm a big fan of risk here. I think risk can work. I think the way people are going about it in fixed income portfolios is incorrect. Like if you want risk in your fixed income portfolio, you should not be buying investment grade credit and high yield credit at the tightest spreads you've ever seen, right? Because that's just interest rate risk. What you should be doing is looking at like dividend paying equities, for instance, in telecoms, utilities, etc., where you have some upside and you can get a 6-7% dividend yield.
Can I ask you, what do you think of all these private credit funds right now?
Boy, you know what? I'm getting shadows of 07 a little bit.
Are?
Yeah, you know what? Not to the extent of back then, but the thing I'm nervous about is there's this big push to put private assets in mutual funds and ETFs and things like that, things that trade by appointment and putting them into vehicles that trade by the second. And whenever I start to see things like that, I just personally get a little bit nervous. I'm not saying private credit is bad at all. That's not what I'm saying. In fact, a good private credit manager can manage you through recessionary times and a bear market in private credit. What I am saying is this huge push to take illiquid assets and put them in liquid
semi-liquid or liquid.
Yeah, exactly. Some of these things trade by appointment. I mean, there's a lot of private credit out there that should not be trading at par value, but that's where it's marked, right? And so I think you just have to be very careful about that. And it gets me nervous whenever I see that, because you remember what happened back in the day with the ABX index and taking illiquid mortgages and putting them in liquid vehicles, and the rest is history.
Wow. That's scary.
Well, yeah, I'm not trying to scare people. I'm just saying and like I said, I'm not a bear on private credit. Private credit's a very diverse asset class. Some parts of it are very resilient. Other parts of it get me a little nervous. And some of the supply I've seen recently gets me a little nervous. But what I am saying is you just have to be, you just have to keep a very watchful eye, make sure you know your managers.
To the extent that you see these signals of exuberance.
Yeah, there's a lot of them.
Right? You were talking about meme stocks earlier.
What I've seen the last week is unbelievable.
Right. So what does that say to you about all of this?
It tells me that investors are very unafraid right now. I mean, the Reddit bros are back, right? I mean, they're taking, do you know 15% of volume on the stock exchange yesterday was taken up by one penny stock that traded 32 billion shares?
I've never heard of that stock.
Some 5-cent hospital stock or something.
Right.
I look at that and I'm like, wow, this stuff does not happen in restrictive rate.
And the thing that's also happening is we're setting new highs, which I guess you can explain some of the reasons we're setting new highs.
Yeah, earnings are good and economy's good.
But it's doing it while volatility is really compressed.
Yes, volatility is very low.
Down.
And that's the other thing I'm pointing to is, like, you look at all these factors, whether it's stocks at the highs, the meme stock mania, the credit spreads being extremely tight, vol at the lows. Is that consistent with a massive rate cutting cycle? And the thing that's a little annoying is that when you hear people demanding rate cuts, what's their primary rationale? We have too much debt. Our interest costs are too high. If I got over-levered, if one of my small companies got over-levered and I took on too much debt, could I go to the bank and demand a lower rate because I took on too much debt? Right? It's just common sense. So
as a result, are you hesitant about investing, or do you think that this is momentum that could really continue?
Well, no. So on the risk side, I think there is momentum that can continue, because just literally everything coming out of this administration is favorable for risk. I'm not saying you can't have a shock. Like, people always ask me, well, Bill, what's going to, because I'm holding quite a bit of liquidity right now, because I'm not going to buy things like high yield at these incredibly tight spreads. I'll wait. Like in April, we got a few opportunities to buy convertibles, high yields, and we did it. Like, we spent around 10% of the fund. Now we're getting rid of that stuff, right? Because it's too expensive. When I look at the overall risk environment right now, I do think it's favorable. I do think it's susceptible to shock. Like, if you told me in mid-March that, Donald Trump's going to hold up a tariff sign and that's going to cause the market to go down 20%, I would have said, well, that's a little extreme, isn't it? But that's exactly what happened, right? So the higher you go, the less of a catalyst you need, to have a serious correction. And that's the thing you have to be careful of here. But I will say, earnings are good. Everything coming out of this administration is favorable for equities. But at the same time, those things that are favorable for equities are not necessarily favorable for fixed income, right? And that's why I think fixed income investors have to be careful. And what's wrong with owning the short end at 4 to 5%? Why take a risk on a 10-year at 440? When you can get almost that much in money market? Why? It just, especially with the fiscal situation that we have, that we're embroiled in right now, which isn't getting any better.
So you degens pumping those freaking meme stocks, aren't you? Eric, Block V up over 30% today. Nice, good for Block V. I hope it does, but I hope it does well. But listen, your Block V could be up 600,000%, my friend, but it's not listed anywhere. So if no one can buy it, what are you going to do, right? You can't. On paper, it's up 30% on paper, but if you can't sell it, what good is it, right? Jerome Powell rejects calls to resign. defending the Fed's independence. Powell is an independent woman, my friends. He doesn't need no man. He doesn't need no man. Okay? Part of the appeal of meme stocks, though, because people feel backed into a corner, not just because, yeah, well, you're exactly right, because everything else is a rigged game, right? So, exactly. All right, let's get into it here. Powell, the independent woman. Jerome Powell, chair of the U.S. Federal Reserve, asserted his stance against resignation despite pressure from President Donald Trump, affirming his commitment to the Fed's independence as of July 2025. Powell's resolve to maintain Fed autonomy highlights tensions between political influence and institutional independence, indirectly affecting financial markets amid circulating unverified claims of policy shifts or resignations. Powell's refusal to step down underlines his commitment to the Federal Reserve's independence amid President Trump's calls for his resignation. With his term ending in May of next year, Powell's leadership comes with a focus on resisting political interference. So it's too bad that he's going to be there for the rest of this bull run, because if his term ends in May, he's got what? What are we now? So August, September, October, November, December, January, February, March, April. So he's got 8 months left of his term. Under the rising tensions, no significant policy changes from the Federal Reserve have been reported, suggesting stability in monetary governance. This decision ensures continuity in the central bank's operations without any immediate fiscal disruptions. Reactions from financial sectors remain monitored, with key figures like the U.S. Treasury Secretary Scott Bessent stating, quote, "There's nothing that tells me that he should step down right now. He's been a good public servant." This stance promotes a unified government approach defending institutional independence. Did you know the Federal Reserve last saw comparable political pressure during the Nixon administration, which did not result in leadership change, highlighting the institution's resilience amidst political turbulence? Interesting. So, political pressure on the Fed chair has not worked in the past. Will it work this time around? Well, I guess there's only one way to find out. Has altcoin season started? Will it? Or will it never start? Top analyst answers. While altcoins have experienced a huge rise in recent days, led by Ethereum, the expectation of an altcoin season is increasing in the market. The strong performance of altcoins is attributed to strong institutional buying, with data showing a recent surge in institutional funds into Ethereum, XRP, and Solana. In addition to the increased institutional inflows, the passage of the U.S. stablecoin regulation law, the Genius Act, is also cited as one of the factors fueling the altcoin bull run. At this point, analysis companies and analysts expect the altcoin season to begin soon. So is altcoin season near? Analysts from Swissblock noted that Bitcoin dominance is falling and funds are shifting from Bitcoin to altcoins. Quote, "When this happens, when BTC dominance declines and funds generally shift towards altcoins, a strong altcoin season occurs. Currently, as Bitcoin's upward momentum slows, capital rotation has begun, and if this trend continues, we could be entering a full-fledged altcoin season." Bitfinex analysts also believe that an altcoin rally is imminent. They noted that the current situation could be the start of an altcoin season, with investors more interested in altcoins than BTC. While analysts at Bitfinex and Swissblock are expecting an altcoin rally, one analyst argued that it is difficult for altcoins to experience a sudden surge unlike previous cycles. Quote, "As Ethereum starts to rally, there's a high probability that liquidity will flow into altcoins more broadly, but at the same time, it will be difficult to see a sudden sharp gains of more than 100x for the majority of altcoins as the past. The uptrend will likely continue for altcoins with solid fundamentals. Yeah, blah, blah, blah. That's BS, guys. I'm sorry, but you get these certain analysts, or they call themselves analysts. You get these certain influencers who talk about how only utility plays are going to pump. And listen, I'm not a meme coin guy by any means, right? I'm not. You guys know that. Once in a while, we'll talk about a meme coin here or there. I'm not against them, but I don't promote them. I'm not for them. But at the same time, that I don't think meme coins are just going to die because utility. We're not. Here's the long and short of it. We are not in a utility-driven asset class right now. I don't care what any other YouTuber out there says. No, we're not, right? If we were in a utility-driven asset class, meme coins would not be performing the way that they do. Neither would a lot of these no utility tokens and stuff like that. You'd see projects like ZBEC and XCN would be in the top 25, top 50, whatever, right? We're not in a utility-driven asset class right now. Will we be eventually? Of course we will. I believe what they need to do, being fully transparent, is I believe they need to make separate exchanges for meme coins, like gambling websites and stuff like that, and move meme coins over to those websites, separating them from utility companies. Because what happens, guys, every time a meme coin rug pulls or something, crypto gets bunched in with it. Utility tokens gets bunched in with it, right? So, yeah, I think there needs to be a degree of separation between meme coins. Meme coins are more like online gambling than they are crypto projects, right? So there needs to be some sort of, and that will come in time. That will come in time. But for right now, we are in an asset class that is driven largely by community and speculation, not by utility, right? And that's the mistake a lot of people make. Rant over. All right, what else do we have over on Squawk Box? Look at Jerome Powell. Look at Jerome Powell. He looks ridiculous. Doesn't he look miserable standing beside Trump here? Look at him. I don't know. He looks ridiculous. Let's get into it.
0.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed. Now, you're including the Martin renovation. You just added
our entire capital.
Yeah, you just added in a third building. Is what that is. That's a third building.
Well, no, but it's a building that's being built.
No, it was built 5 years ago. We finished Martin 5 years
ago. It's part of the overall work.
So it's not new.
Bicker.
Well, those tensions between President Trump and Fed Chair Jerome Powell playing out in real time in front of the cameras yesterday during the president's visit to the Federal Reserve Building. Joining us right now is someone else who was at that meeting, the Office of Management and Budget Director, Russell Vogt. He was with the president yesterday. And Russ, thanks for being with us this morning. We saw how things played out on the cameras. How was it behind the scenes?
It was a very good visit. We learned a lot. The president learned a lot from being able to see it with his own eyes. He's a master builder. He has had great interest in this project. We learned a lot from watching him as a builder, figuring out the types of things that he would never have done in designing this as a renovation. And fundamentally, the reasons for why this is costing so much. They had good conversations throughout, and we're not surprised that they don't necessarily agree with every of the viewpoints that we have, but these are the numbers that have come from the Fed, and they are entirely correct. This renovation, a combination of all of the headquarter buildings, is $3 billion, and the overrun just for those two buildings, we want to talk about just those two in the Chairman Powell, the overrun just for those two buildings is $1 billion, and there's some unbelievable reasons for why that is so.
Such as,
number one, they are putting a tunnel in between the buildings. Number two, they're essentially excavating an entire basement approach in an area of the DC the National Mall that we know has problems with water. So you have to go very deep. You have to be able to figure out how you're going to prevent future leakage down the road. And they have a enormous parking lot that they are building into the ground that is something that most agencies don't have. for $30 million compared to the $250 million for the parking itself, you could be able to provide parking benefits for the entirety of the Fed. There's largesse everywhere you look. And there are some fundamental reasons for why this thing has become so big. This is not just restoring a building that needed to be restored for its historical purposes, nor is it the only renovation this building has received. That is inaccurate. This building had renovations at the turn of the century, 1999 or so. And so there's been a lot of work done to this building. This is about doing enormous renovations of an entire headquarter building and largely escaping the notice of the public and Congress.
Well, Russell, that's where I wanted to go with this, which is to say, you know, and I'm all for shining a spotlight on things. Transparency is clearly important. The question that I have as a taxpayer, and the criticism of the Fed in this context, if the criticism is valid, is whether you ultimately think or can specify that this wasn't done in a transparent way. Meaning, was this all some kind of secret that nobody knew? From my understanding, all of this was disclosed to Congress and to the government. It's obviously, we can see it physically happening if you walk by the building. So while it's important that the administration or others, you know, say maybe there's a problem here, or not a problem, but there's cost overruns here, the question about sort of that this is terrible is what?
No, look, the information that we've ascertained, that Congress has ascertained, has become as a result of the oversight process. And we heard yesterday from Chairman Scott the extent to which it's been prying teeth to get this information from the Fed in a way that you would not have if you were trying to get Department of HUD to talk about their building campaign, which hasn't happened, is why they're having to move. And so as a result of that, we've had to rely on FOIA documents. This material hasn't been in their normal financial statements. This is something that has been at every step a huge labor to get information about what's going on, comparing apples to oranges with regard to being able to hide the extent to which those two buildings are overrun. The totality of this renovation project, begun a number of years ago, approved in 2021, is a $3.1 billion. It is the same levels of if you include all of the Palace of Versailles, if you include all of the congressional buildings from the dawn of this republic to now, this building equals that. That is what we are drawing attention to. And the other thing I would just say is the extent to which they continue to say, look, we've made these changes. They may have made some, but they're still relying on much of the same design. They talk about, oh, there's no private dining rooms. There are meal-ready meeting rooms. Meal-ready meeting rooms are private dining rooms for the executives of the Federal Reserve. And so that is the kind of things we're trying to get to the bottom of. The National Capital Planning Commission will be very involved in continuing to ask questions. But I think what you heard from the president yesterday is like, we want to get this thing done. This is not an attempt to say this project should be halted permanently. We want to get it done, and we want to get it done as cheaply and efficiently as possible. Right. But I think it gets to the degree to the fiscal mismanagement of the Fed.
Right, but Russell, part of what I think a lot of the public sees, and even the investor class thinks, is that this is a pretext to either try to fire the Fed chair or to pressure him effectively to lower rates, and that this is sort of a leverage point in a larger discussion and debate, and or a way to distract from other issues that maybe the president's dealing with at the White House. So how do you see that?
You can only answer the question so many times, and the president has done that. He's asked repeatedly, do you intend to fire the Fed chairman? He said, no, it's not likely. I have no intention of doing that right now. And this is about ensuring that the Fed has the accountability of the American people knowing what's going on. Does the president have viewpoints? Yes, he does have viewpoints. The American people get to have a say in what they believe the Fed should do. The president believes that the American people, as the person that is elected on their entire behalf, get to have a say in whether rates are lower. And so if you're at the Fed and you're getting questions about both, of course you're going to answer to both of those issues. But it's also true that the Fed is needs to be accountable for things that are beyond monetary policy. Their building, their ability to transmit remittances back to the Treasury that impact our deficit, the extent to which their regulatory activities are supposed to go through a regulatory review process, of which they are not complying right now. So there's a whole host of issues with regard to the Fed, and we want to make sure that those questions get answered over time. This is not a pressure campaign on the Fed chairman.
I think it's a prelude to firing the guy. Let's be honest here. Which, I mean, whatever, I don't care. Braveheart, joining the 10% club in January was a wise move. Thanks, Rob. Hey, absolutely, brother. We love having you over there. Guys, you got to get over to the 10% club over on the Patreon. The link is down below in the description. It's in the chat. It's in the pinned comments. You want to make that money. You want to make life-changing wealth. You got to become part of the 10% that actually make life-changing wealth in crypto. BlackRock's Ethereum ETF surpasses 10 billion mark. BlackRock's iShare Ethereum ETF achieved a remarkable milestone by surpassing $10 billion in assets under management within 251 days. This accelerated growth highlights significant institutional interest and impacts Ethereum's markets. BlackRock, led by Chairman Larry Fink, manages the ETHA through its iShares brand, propelling its expansion into digital assets. Despite no direct BlackRock leadership comments, Bloomberg's Eric Balchunas noted that intertwined Ethereum price and ETF flows. While TVL specifics aren't detailed, the history of ETFs launches like BlackRock's Bitcoin ETF suggests highlighted on-chain activity. Institutional inflows into Ethereum also influenced related assets, from DeFi protocols to ERC20 tokens. Ethereum's ecosystem continues to evolve as institutional participation grows, with many analyzing the regulatory implications and future trajectories of such investments. Analysts examine implications for future Ethereum and regulatory landscapes. Recent developments underscore Ethereum's evolving role in institutional portfolios, bolstering confidence for future asset management strategies. Now, I was supposed to upload a video last week to the Patreon about I've kind of formed a different perspective on Ethereum as of late over the last few weeks, and I do have a exclusive 10% club video coming out over on the Patreon today. I will upload that, guys, along with your daily altcoin picks. Don't miss that as well. I will be uploading those videos to the Patreon this afternoon, and we will be live. It is open mic Friday night as well over there, guys. Let's go over to Bitcoin again and see what's happening. Still climbing, guys. Bitcoin's still climbing back up, $116,588 and climbing. Can we get back up above this white line of support before the end of the day at $117,234? We'll find out, guys. We will find out. All right, guys. So listen, get over there. Also, just so you guys know, we did an exclusive Patreon live stream last night with Max and Rule Black as well. We dropped 4 small cap gems in that live stream, guys. 4, okay? Absolutely fantastic. You want to get in early on these projects. Now's the perfect time, guys. I've said it before, I'll say it again. 90% of people in crypto lose money. Only 10% actually make true life-changing wealth for themselves, right? And that wealth comes from the other 90%. That's how that works, okay? It's a transfer of wealth, because these people, the 90%, lose money for a variety of reasons. If you want to be part of the 10%, guys, join the 10% club today. The link is in the chat. It's in the pinned comments. It's in the description. We have thousands of members over there. We're live every day. It's open mic Friday night as well. You do not want to miss it. We got some more super chats coming in. Candyman says, I'm at an age where my mind firmly believes I'm 29, my humor suggests I'm 12, and my body possibly died in World War II. Humor is important. Amen to that, my friend. Amen to that. I feel you. Ramona, I think Trump is blackmailing Powell to lower interest rates if he doesn't cooperate. He'll fire him. Yeah, hey, I agree. I agree 100%. It's political pressure. Absolutely. And we'll see what happens. Obviously, this month, we're not going to see that rate cut. But if we can see one in September, August is going to fly, guys. Absolutely. So, yes, get over to the 10% Club, guys. Also, use our link down below to get yourself a free ZBIC airdrop on your Decent wallet. 20 bucks off your Decent as well. Take advantage of the offer. It's only good till August 5th. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys later tonight. God bless.